Everyone's talking about the growing U.S. deficit, but what I want to explore is how to capitalize on this growing deficit. We don't see the U.S. cutting its spending anytime soon. In fact, as it takes part in this global AI race, we think the stakes have never been higher to increasingly invest. The question on our minds and on many investors is, how can I capitalize and profit from the growing deficit? So there's three main areas I want to explore. The first is international equities. Over the last 10, 15, 20 years, U.S. equities have been the place to be. It's been one of the best performing asset classes from one of the best performing geographies. For that reason, we think a lot of investors are underweight international equities, emerging markets, and even developed markets like Europe. So we would propose to a lot of investors, consider your international exposure. International equities not denominated in US dollars could do better in a period where the US deficit expands and the US dollar continues to get devalued. Second area to explore, let's talk a little bit about alternatives to the US dollar. Gold and Bitcoin are the primary assets that come to mind when you think about what will do well when the US dollar loses value. There's this crisis of faith in the US's ability to pay down its debt. You're seeing a lot of investors say, what are alternatives? Bitcoin is one alternative. Gold is a historical hedge against the dollar devaluation. And the last one is something a little bit alternative, and that's private credit and infrastructure. Not only are they less liquid than traditional equities, but in many ways, the underlying structure of these asset classes is inflation protected. Let's take infrastructure, for example. A lot of the underlying loans in these asset classes are inflation adjusted. They're long-term contracts, and those contracts have pricing escalators based on inflation. So if the US dollar goes down as the deficit grows and inflation creeps up as a result, those asset classes are in some ways protected from that inflation because they can raise price to match.